Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 207 of the AJ Brown Show. Today is October 24th. Halloween is next week. And with me, as always, the main man of the hour, AJ Brown. Good morning, AJ. How are you feeling today?
Getting ready to be spooky, I guess. I'm feeling great.
I'm surprised that week 4 we're still in the government shutdown, and I believe there was a vote yesterday. Nothing passed. A little disappointing. However, the markets are continuing to move past that and looking at other economic news. I believe we had some inflation news today. Where do you want to get the ball started today?
I want to take a look at the charts. Let's go right into some technicals.
All right. New highs? New highs.
Yeah. Well, and here's the scoop, Sip. Let me highlight this level. So we've got some reversals, right? And so we had this top reversal identified on October 8th at $6,753.72. And then we pulled back and we got this bottom reversal 2 days later on October 10. And you might remember October 10 was when Trump tweeted before the market opened about how China is on the outs, right? We're not even going to go meet with them and we're going to raise tariffs and yada yada, and the market didn't like that, right? And then there's been some recovery rhetoric, although on Monday he was getting softer and softer, and then Tuesday and Wednesday, right? This was Wednesday, he came back and he was again aggressive towards China. So it's up and down, trying to follow this man's emotions. And he's just like that cousin of mine that won't stop publishing on Facebook about what's happening in her day. It's like you're trying to follow day to day and you're like, you know what, I don't actually care. Well, that's what's kind of happening. Trump just day to day, stream of conscious, jots down on his social media what he's thinking that day. But little does he know, it's not just like my cousin where me and 3 other people follow her. It's like the whole world is following this dude. And so he's I'm not sure he understands that the market's listening. So suffice it to say, we actually got some hard data today. And that data was some inflation number. It was the consumer price index, about a week late. And we've been watching this level that was established back on October 8th, this top reversal level, because if we would have gotten a bottom reversal before getting above that level, that would have meant that this move would have been a range contraction move, and it would have matured this new trend that started on September 25. You can see that new trend highlighted by these dotted lines right here. And so if we would have gotten a top reversal before getting below 6,000 or getting above 6,753.72. And to be honest, Sip, all throughout the week, it looked like that might happen. We just couldn't get above that level. You could see where we closed yesterday. We can see where we closed on Tuesday, where we closed on Monday. We just weren't getting above that level. And everybody was like, you know what? This new trend is going to mature. We're going to be in a sideways, choppy market for a while. Maybe we're going to get closer to, getting a pop to our current bubble. We might see some downward price action. All of those thoughts were going through investors' minds. But with today's inflation numbers not nearly being as bad as people expected, that was very positive for the market because the market wants to see the Fed drop interest rates, but they also aren't too excited about inflation getting out of control. So with inflation supposedly being in control after today's report, investors are a little bit positive. So they caused price action to get above that magic level of the top reversal from October 8th, which was 6,753 and 72 cents. And now with price of that, this move becomes a range expansion move. The only thing that might change that is if some bad news comes halfway through today and we wind up closing back below that level. But if we stay above that level through today's close, what that means is that this trend is over. We're starting a new trend, and this trend never got a chance to become mature. And therefore, we might actually wind up negating it and going right back up into this uptrend that we started all the way back in April. So a lot has to do with what happens today at close and where we wind up being. If we stay above 6,753.72, we're starting a new trend in the up direction. And depending, once it matures, we may actually negate this couple of weeks that we've been, seeing this immature trend form. So a lot's going to happen that I'm going to be watching till the end of close today.
Yeah, because of the current government shutdown, the cadence of economic reports is a little spotty, and it seems as if this one was one that people were waiting on. We got some information, and as you and I were saying before the show, it seems as if 3% is the new 2%, and as long as inflation stays within that 3% annual number, investors and the street is happy. What are you seeing from the data specifically today?
Well, yeah. So the scoop is, and I'm just writing some math here. We got 0.3% for the month, which if you kind of extrapolate out for 12 months is actually 3.6%. But okay, so 3.6. The thing is we were expecting 0.4, and so we got 0.3, and we were expecting 3.1, and we got 3. And same with when you start to pull out more volatile food and energy numbers, we were expecting higher numbers than what we got. This is for September. And so, it means that inflation isn't running out of control. But coming back to that statement you just said around inflation, I threw this tool together right before we had our show. I just wanted to, because a lot of people, you hear this number of inflation and you're like, I don't know, how do you actually materialize it? So I decided to put this together. If we were going with the Fed's target rate of 2%, that means if you were spending something that cost $100 today, in 10 years, in theory, that same thing would cost about $121, $122, right? That's at that 2% target rate. Now, look at what happens when we go to 3%, because it's a rate. It's not a fixed number. If it's 3%, well, then at the end of 10 years, that thing, instead of being about 20% higher in price, it's now almost 35% higher in price. And if we go back to that we were seeing, 5-6%, it starts to build on itself. In 10 years, something that cost $100 today would cost 160. It would be up 62%. And if it was up around that 6%, well, 6% brings us almost to 80%. Remember, people are always talking about the magic 7% number. The magic 7% number, in theory, if the S&P were to go up 7% every year, which if you do a best fit trend line, that's roughly what it does. It means that you double your money every 10 years. But in inflation terms, that's scary, right? In 10 years to have something that costs $100 a day, all of a sudden costs $200. So keep that in mind. The difference between 2, which is only going to be a 20% increase in prices in 10 years, and 3%, 35% increase in price, that's no small beans. So, the Fed would like us to grow at about 2% in prices every year. That's their target. That's what they'd like to get us down to. If 3% is the new 2%, we got to, make sure that we're making as much money as we're, spending by the time 10 years rolls around. We got to look for efficiency gains, things like that.
When you bring this chart up, the first thing I think of is McDonald's. I'm like, oh, I think of like a chicken sandwich or like a cheeseburger and what that used to cost 5-10 years ago versus what it is now, and I'm like, oh, these kind of this kind of layout of numbers kind of makes sense when I bring it into some everyday purchases, and
Right.
so is the consensus that because the inflation is a little bit tamed, we're going to continue our trend of a rate cut next week? Because I believe that's what would take the market it would take the market higher and continue the positive sentiment in that respect.
So interestingly enough, I mean, it's still almost unanimous. This is what investors think is going to happen next week. And it, still 100%, not 100%, but 92%. There's a belief, almost a unanimous belief that there's going to be a 1/4 point rate drop. What's interesting to me is this number was a little bit higher last week. If you remember, let's see. If I scroll down here, they usually tell me what the week ago numbers. 1 week ago, it was at 93.7. 1 month ago, it was only at 73%. So, it's been at 93. It's pulling back ever so slightly. But I also noticed that there's a small percentage of people now who actually are wait a second. Look at this. I'm not reading this correctly, am I? Oh, wait. Sorry about that, Sip. I'm on December. Let me look at October. There we go. Whew. So last week, yeah, I know. I'm all over the place. Last week, this was at 98.4% and 0% for no change, right? This is no change right here. And this was 0% last week. And there was actually a percentage last week, like about 2%, that thought it might be a 50% rate drop, right? Of a 0.5% rate drop. And now this number has gone down, and this is now 0%. Nobody thinks it's going to be a 0.5 point rate drop. Instead, there's a few people who are like, you know what? The Fed may actually do nothing. But the majority of people for next week say the Fed's going to drop a 1/4 point. And I think that's actually what's going to happen. Let me show you December again. Looking at both of them this morning. December, again, now people are saying, I think there might be another 1/4 point rate drop in December. But there's a tiny sliver of people who say there might actually be a 0.5 point rate drop. And there's also people who are like, you know what? We might get a 1/4 point this time around or a 1/4 point in December, but it's only going to be a 1/4 point in the two of them. So majority of people are still saying the same thing as last week, but it's interesting to see, a slight change. The slight change is towards less rate drop, but it's just ever so. I think we're going to get 2 1/4 point rate drops, one next week, December.
And I guess the rhetoric of, the follow-up statement is going to be very important because it's going to be the question of, well, why? Like, what is your rationale for your decrease in rates? And I believe
softening employment.
It's always a battle of exactly. And the question there is, what's going on with employment? Do we have data? Do we even have anything to kind of base our decision on? Does the Fed have anything to base their decision on? Because I guess this employment, I mean, do the federal employment numbers go into those employment numbers, or are they everyone's kind of like furloughed for a month? And I mean, because what is that, 500,000 people not working? I mean, that could put a huge dent in the reports, right?
And, on top of that, the ones that are working may not get paid. Yeah, I don't know how the Fed is going to evaluate the shutdown, or if they're going to, think that that's just a blip on the radar, although it's becoming one of the, I think it's number 2 in the longest shutdown. There's only one other, and that happened when Trump was president the first time. But soon, if this goes, into November, into the, here in Virginia, we have an off year election. We're actually having our Virginia State Assembly and the governor being elected. The question is, that's going to make it the longest shutdown ever. We're not getting any data. So is the Fed going off the data that we got before the shutdown, which was that employment is softening? I guess what's happening is the Fed would drop rates if employment was suffering, and it would make people worry about inflation. So if we got the numbers today that said inflation maybe not anything you have to worry about, it gives the investors more confidence that if the Fed does drop rates to take care of employment, that inflation's not going to go off the rails, at least not right away.
And this week we're also getting a lot of earnings data, which is kind of, driving certain sectors. But before we chat about that, I'm curious with these new market highs, what's happening with the VIX, because the last couple of episodes, you've put on a stellar position in that VIX. And it seems as if every time we hit these new highs, we get that opportunity to pull back. Are you seeing that opportunity to get back into the VIX? And or do you feel good about it? Because, at any moment we could get one of those Tinder, explosions to move the market, like we did 2 weeks ago with the China news, right? We were live when the market dropped like 1% or 1.5%, and that was a pretty big down bar when you look at, when you move the view out a little bit more. What's the VIX telling you?
So let me tell you, when I look for an entry for my VIX hedging trade, I'm going to use the fast MACD, and I am going to calculate it on closing price because the VIX really doesn't have a way for us to volume weighted average price. So I just wanted to throw that out there. And so the VIX is dropping after all those shenanigans with talk about China and all that stuff. The VIX is coming back down. It still hasn't come back down to the $14 level or the $15 level. It's at about $16.39. It's below its all-time mean. I'm looking for that light blue arrow, and I usually look end of day. So I wait until the market's closed, and then if I see one of my light blue arrows here, then I will look to open up the next VIX hedging trade. The one last Friday, before we had our show, I closed it and I made max profit off of it. So I'm looking to do that again. If I don't do that, that's fine. But if another one of those spikes happen, like you're saying, and the way that things are converging right now, it seems like there's another spike once a week now. If any of those spikes happen, I'll be able to, again, liquidate my VIX trade at max profit. And I love doing that.
Yeah, and anytime I see that VIX at 15, 16, I think about this chart, and I think about your setup, and I think about that 3-week window of, buying some of this volatility and, trying to get that max profit, because the way you set this up is your risk is really, really low. And if nothing happens, it's almost like a break even. But if something does happen, it's a phenomenal return.
Yeah, it's 2 vertical spreads, usually expiring, 2 to at the most 5 weeks out. And the scoop is if it was to, you mentioned that the risk is low to almost nil, and that has to do with people becoming more confident. You would have to have an uber amount of confidence, which isn't happening anytime soon, given the climate that we're in, to make this thing go against you. So the 2 cases are it breaks even, and I usually set up these 2, a debit spread and a credit spread, so that there's a little bit of credit at the end. So even if it breaks even, I at least pay for my commissions, maybe get enough money to, take my wife out to a nice dinner. But if something goes off the rails and the fear and anxiety, remember the VIX is a measurement of anxiety, right? what people think is going to happen in the future and what they should be anxious about. And if their anxiety meter goes off the rails, the VIX jumps up and my spreads both become profitable. And so I make max profit. So that's what I actually am looking for in this hedging trade, is for things to go off the rails.
And I love it, and it looks like the fans love it. Boomer Dan basically came in and said, "We love that VIX setup." Well, we certainly do, and AJ has found a way to perfect this approach. And if you're interested in these blue and magenta arrow signals for yourself, that is available in our on our links page, on our quick links page. This is one of the trading tools that you can access in the Trading Trainer free toolkit section, and this is one of AJ's go-to.
I'm actually doing a write-up on this to go into the details, so that if we'll make a download available so people can actually read the actual specifics. But usually, when it comes to picking the strike prices, it's and that's why I like being an end of day trader. I like doing this after the markets close, where I have, some time. Usually for me, it's 10 p.m. at night after my little one is asleep, and I've already said my niceties to my wife. I come steal up to my office, and so I've got a couple of minutes, right, where the market's not moving. And if I see my light blue arrow, what I'm going to do is I'm then going to trial and error different credit and debit spreads at the different strike prices. And I'm going to find the ones that cancel each other out and then compare them on the chart. I'm like, is there some sort of level? Like if I can, for instance, match up a 14.15 with a 19.20 and get them to cancel out, or even better, have the debit be a little bit less than the credit, so that if the trade winds up in that break even, I make a few pennies on each share or a few dollars on each contract. If I line those up, then I'll come back to the VIX chart and see where they are and see if there's some sort of levels of support or resistance. If not, I'll keep looking for those pairs. And it's just kind of a trial and error thing till I find the ones that give me that right amount of credit and also look like they fit on the chart. I'll know then exactly, like, man, if this thing goes above the 1920 level, then it's going to go to max profit, right? It's those step functions that I keep drawing up here. So, if price stays in this range here, then it's break even or a slight credit. But if it bumps up, and usually these are $1 spreads, so if it bumps up above the $20 range, then this whole trade goes to max profit, right? So that's kind of how you think about it.
And I'm not sure if you answered this, but the question is, what is the low price on the VIX that you would set the lower spread at?
And so, being the end of day trader, like I said, it's trial and error. What the first thing you do is you find the match between the prices. So you find a credit that's maybe a couple pennies, maybe a nickel over the price of the debit, and you're going to find those two, and then you're going to come back to your chart and align. So it all depends when you get your signal at what are those prices. Then you try to go for it the next day, right? Try to get those place those two debit spreads, and you can leg into this. You might, if the next day it kind of goes in one direction, you can get your debit spread on first, and then if it moves in the other, you put your credit spread on. You don't have to place the trades simultaneously. You can try to get the best prices for each individual vertical spread. But yeah, the night before, when I actually get my light blue arrow, is when I'm going to start, number one, picking the two spreads so that they can cancel each other out in cost. And then number two, see where they fit on the VIX chart. And if they don't look like, there's a level of support at the bottom and a level of resistance that I would break through if there was a fearful event or a perceived fearful event, then I would just keep tweaking it until I find that right combo. And then the next day during the trading session is when I try to fulfill that combo.
Hopefully, or what I was going to say is if you want to learn more about the VIX trade, head on over to our YouTube channel and type in VIX, because I'm pretty sure at this point we've got like 10, 15 videos in terms of, getting this VIX trade set up. The other thing that I was a little surprised to hear about this week that we discussed last week and the week before was gold prices.
Right.
Gold continued to hit all-time highs, but this week we finally got a little bit of a pullback,
especially
and
today.
I want to know, and I was curious what your take on that was. Is that a good thing?
Yeah. Well, it is. Well, so the scoop is money's coming out of the VIX. That means, right, the anxiety level is dropping a little bit, and that's kind of the same thing we see with gold. So if I come back over and take a look at the price of gold, gold has pulled back roughly about $100. It doesn't mean it can't go right back up, but it's off its all-time highs from about a week ago. And then you'll also notice, and Bitcoin's an interesting character. Bitcoin's kind of getting back up in price. It's not back up at that $125,000 level, but it's now coming up off of the 105,000 back to the 110. So Bitcoin, people are confused on crypto as to whether it's a store of value or whether it's a play on risk. I think right now the majority of investors are thinking it's a play on risk. And so if you start to see the Bitcoin price, start to creep up, it means that people are feeling a little bit more comfortable with risk, which means they're feeling more confident, less anxious. So less anxious means price of gold means the VIX comes down. More confidence means the price of Bitcoin goes up. I was reading that, they've just opened up new public lands for oil drilling and all of that good stuff. A lot of people have to realize there's a lot more going into the equation than the news headlines about what the US government thinks about, oil drilling. If the price of oil is up a little bit, but man, it's down overall. If the price of oil is below $70, there's not going to be any new drilling. In fact, there's probably not going to be any new fracking even to try to find more oil. $70 for a barrel of oil is really cheap. And so you're not going to have the investment by the oil companies to try to find more oil because it's not profitable in the moment, right? So even if you see these headlines like, hey, we're opening up the Arctic refuge, we're okay with oil companies making roads through these lands to get to their oil, it doesn't make sense. It's very expensive to drill a new well, especially in the cold Arctic refuge. It's very, very expensive. And unless price of oil is up at 70, 80, closer to 90 or $100, you're not going to see any new oils drilled. And then the other thing that they can do is go to wells and frack them to get more oil to come out of the shale that's underneath the ground, basically break things up underground and go sideways and things like that. And even that costs some money. And, with oil in the high 50s, low 60s, you're not even going to see the oil companies wanting to invest in that kind of technology, that kind of upfront cost, if they're only going to get $60 a barrel of oil. It would have to be more up at 70, 75, 80. So just keep that in mind, that who cares what the headlines? It's like I've always said, the talking heads can report on whatever. And now the biggest talking head happens to also be the president, right? Because he's talking directly to the people through his social media. But the scoop is when you think about reality and the economics of these oil companies, it's great that the U.S. is making it possible for them to build these wells, but is that going to happen? Not right now.
I mean, I feel like most consumers are pretty happy and content with where oil price or gas prices have been. I mean, I saw some pretty interesting national maps, and then I think about living in California,
you
and
guys,
I'm like, oh, well, we definitely don't benefit from any of that, which is unfortunate. But the rest of the nation seems to be doing, appreciating the lower gas prices, and we're not hearing it in the news as we have in the
Right.
past. And maybe that's having a somewhat of an effect on some of these inflation numbers. But
Possibly.
that gold pullback, interesting. I keep hearing that 4,000 mark is kind of one of those critical numbers. All right. So yeah, that's a lot of coverage there.
For the fact that the government's closed and is not reporting any economic data, on a consistent basis, there was a lot that happened this week.
Without a doubt. In addition to that, I believe that can pivot well into our morning sip. And so this week's morning sip, and I don't know if you caught any of the earnings news from this week, but specifically, what caught my attention was the Tesla earnings call. I don't know. Were you able to catch any of the blurbs from that?
A few of them, but what's your interest? Tell me.
Well, the big takeaway was this $1 trillion pay package to Elon Musk that keeps being, talked about, whether investors want it, whether he's earned it, whether it's too much, et cetera, et cetera. And in the earnings call, Elon Musk, he continues to try and pivot Tesla from being an auto company to being an AI robotics company. And so in his call, you could sense some of the frustration of, him basically saying, hey, if I'm going to build this robot army, which is what he said, robot army, then I want to have control over this robot army, and I don't want to be ousted as quickly as could possibly happen if I build this robot army. And so, my question to you is, do you think that's a good or a bad thing if we kept Elon Musk in control of this quote unquote robot army, and or do we need somebody? Is he the person? Is it government stepping in? Because when I go to and I basically pull up what these robots are going to start to look like, I mean, I could see these in everyday life walking around, because in California, where I'm already seeing the Waymos everywhere, I'm already seeing the self-driving cars everywhere. I'm already seeing the delivery lunchboxes, as I like to call them, the lunchboxes on wheels everywhere. And this would be the next step. And so, what are your thoughts on letting Elon have enough control to dictate what could happen or could not happen with this robot army?
Well, I'm just going based on, patterns, right? And that's what I trade on. That's all of that stuff. For Tesla, throughout the last 15, 20 years, Elon would come out and basically do the opposite that we learned to do in HP, which is kind of what he's celebrated for. When I worked at HP, we would always under promise and over deliver, right? And that way you never disappoint anybody. But you also don't get, some really excited people. You don't get the hype. You don't get all the energy behind it, because when you start talking about going to the stars and then being okay with just going to the moon, that going to the stars gets people excited, right? So Elon takes that to the to nth degree, in my opinion, right? He'll come out and he'll talk about all this full self-driving, and which I agree. I let my Ford truck drive itself all over the place. I'm just watching out the window, and I love that, because that way I can drive at night. I can do all the stuff that, being 52, I don't like to do by myself. But the full self-driving, not being able to look out the window and still feeling comfortable that the thing will take you there, is just now, way, decade after Elon said it would be here. I think he said it would be here in 2015, 2016. It's 2025, almost 2026, and it's just now starting to come to fruition. All to say, he's talking about this robot army. He has to pivot Tesla, right? Tesla is extremely overpriced to be a car company, right? And so in order to justify the fact that there's more investment in Tesla than a car company needs, he's got to pivot into something that's newer. So that's why we're going with the Robot Army AI thing, because people can't get their head around, since it's brand new, cutting edge, they can't get their head around, what is it worth? And so they're willing to invest bazillion dollars in this new stuff versus, cars that are full self-driving. We now have a bunch of them, the Cadillac, the Ford, whole bunch of Chinese companies are doing it now. It's like it's now part of the mainstream, and so you can figure out what it's worth. And when you reverse engineer it, you're like, oh my gosh, we have invested too much into Tesla because all they are is a car company. So he's got to pivot. He's got to talk and get people hyped up about this Robot Army. He has to justify his position in it. Do I think that there's going to be a Robot Army, in the next 1 or 2 years? No. I think he has once again overhyped this. Maybe we'll see it 2035, 2040. Will $1 trillion be worth $1 trillion by then? Taylor Swift will be a trillionaire, right? So do I think any of this is anything besides news media? No. Do I wish that instead of him getting one person getting $1 trillion, that we could spread the $1 trillion around the rest of us? Yeah, I totally do. I feel like if we all got like a piece of it, how many people are in the United States? Something like 300 million. If we all got $1 million and could spend it the way we wanted, I think the economy would grow instead of one person getting it all. But whatever. I'm pie in the sky. Do I think it's going to affect any of my investments? No. Do I think it's a bunch of news headlines? Yes. And that's what my thoughts are on Elon, right? He's really good at getting people hyped up. I think he's done it again. But as far as day to day, it's just another fart in the pan.
It's definitely one of the more emotionally based stocks where they take every word, every tweet that he posts, and they take action on the stock from that rhetoric.
And there's so much FOMO in the Tesla stock. People are so afraid of missing out, but it's one of those stocks that if the bubble bursts, it'll probably be one of the ones that deflates the fastest.
Yeah, I mean, I'm gonna have to swing by that new diner and check this robot out in person, because they have one there serving popcorn. So maybe that'll be on my to-do list.
I mean, serving popcorn and an army, being able to be a soldier, that's a swing. I think there's a gap there.
Without a doubt. But that's that was a hot topic this week. Elon's Robot Army. So we'll see if episode AJ Brown Show episode 500 comes around and we got one of these rolling around. We'll see. All right, with that, folks, we're gonna keep the party going. As always, all of AJ's goodies are available on AJ's Quick Links page. The link to this is in the chat. Head on over there. Show some love, hit that follow, hit that like, hit that subscribe button. We've got access to AJ's free indicator suite. We've got access to his free daily premium selling workshop. So if you're new to the show and you want to get in on some of these strategies, but you don't really know where to start, this free workshop is a great place to begin. If you want a little bit more hands-on help, more hands-on training, we've got this coaching section. And, the general trading trainer community is growing week after week. And if that's something that you're interested in becoming a premium member and getting some more inside access, head on over there, check that out. Otherwise, AJ's going to come back to us here with his pick of the week. We've got our speed round. We've got one of our, longtime guests back in action, asking us some questions on what we want to do with some names. But we're going to take a break here for a second. We'll be back. Looks like we've got the chat humming this morning, so we'll take a look at any of the questions there and see if we can get some answers for you guys. Otherwise, sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. And we're speaking on Tesla, and we run the commercial where you're driving around in Tesla. We might need to remix that with the Ford now, except you got to pull up like this, no hands.
Yeah.
No hands. All right, AJ. This week, you're looking at a potential opportunity in Rocket Mortgage, ticker symbol RKT. AJ's pick of the week. What do you like here? Where do we want to begin?
I got to tell everybody, I'm stealing this one from our weekly members only workshop that happens on Thursdays. This was one of the ones we didn't pursue in our workshop, but I have to say, we've been following Rocket Mortgage. It's been on our list for, gosh, maybe 5 or 6 years. Rocket Mortgage actually just took over some of my loans. So I'm also a customer, not just an investor. Rocket Mortgage gave us a bottom signal, and I know some of you actually took on it. It was an end of day bottom signal on October 14th, and it looks like on October 20th, we got our follow through. So I know a lot of you decided to go long Rocket Mortgage. Either you were buying stock in lots of 100, or some of you went ahead and bought a substitute call option that was far out in time and deep in the money. It's gone up since then. It actually gapped up today. And in the morning and amateur hour sessions, it was actually flying pretty high. It's pulled back a little bit, but it hasn't pulled back below yesterday's close. They do have earnings coming up next week on October 30th. It'll be after the markets close. So October 30th is Thursday. So Friday, we might see a bump. And, Rocket Mortgage usually doesn't, what is this? Is this after? This was after market close. So they did get a bump this previous earnings. The earnings before, they didn't get a bump. You might want to play an earnings play on this, but my answer is number one, if you went long on Rocket Mortgage, then let's be patient. Let's look for our top. When we get our top, let's apply our collar. That means we're going to sell near-term call premium that's at the money, and then we're going to buy a protective put 3 to 6 months out. I'm like buying, March options at this point, maybe April options down here at, for instance, the $16 strike price to kind of hedge our trade. So that's adjusting our main position with a pair of trades that becomes a collar. And once you do that, you've got your set gains, you've got your understand loss, and it self-adjusts, right? So you can sleep easy until it's time to either roll out of the positions or they expire naturally. So that would be my plan. If you miss the entry that came up on October 20th, right? Which I believe was Monday, right? 24th, 23rd, 22nd, 21st. Yes, which was Monday. If you missed that, then when we do get that top, you could go the opposite way. So instead of going long, you could set up your initial position. In this case, at a top, you would short the stock, or you would buy a far out in time, deep in the money put option. I think the one that I picked out was the Rocket Mortgage June of 2026 $30 put, and then you would be set for installing your collar or adjusting the position with a collar trade at bottoms. So you would sell near term at the money put options. You would buy protective calls, probably up here at the $21 or $20 strike price, and rinse and repeat, rinse and repeat. Rocket Mortgage looks like it's setting up really nice for being able to sell premium. Again, I think there might be a blip with earnings, which if you didn't go long, it's kind of probably a good idea that you wait until that earnings announcement happens at the end of market close next Thursday, and then we'll be at our top. You open up a new position and you get to selling some premium. It's looking to be good on Rocket Mortgage in the future. So just get your trade plan in place and be ready.
Yeah, and I always love these teen stock prices anywhere between
Oh
that
yeah.
16. Those are always lovely to see versus those 100+ share opportunities. So that's AJ's pick of the week. Rocket Mortgage, ticker symbol RKT. All right, we've got about 10 minutes to run through our speed round. We've got some good names to run through. Let's start off with one that we discussed last week or the week before. So Deborah out of Denver, Colorado wants to know, do we still have a play in Regions Financial, ticker symbol RF?
So we talked about Regions Financial as an earnings play. And I think that played out nice. I'd love to see some of your results if you want to, send them in to us either from our webpage to contact us, or if you want to somehow reach out to us. But I'd love to see how your earnings trades came out. We got an end of day signal on Tuesday, October 21st. And it looks like, because Wednesday and Thursday we did not get our follow through. But here's how we do it, Sip. If we don't get our follow through, what that means is that we didn't get our trade filled that day. We use conditional orders, or basically letting the trading bots look for follow through on that signal. And if it doesn't get the follow through, if our conditional orders don't get filled, well, then you just try again the next day. And you try again the next day, either you get your fill, or the signal comes back at the end of day that says, hey, guess what? We're going to stop looking. Well, as you can see, I haven't gotten any of my magenta arrows. Let me change this. I want to go back when I'm looking at stocks. I want to go back and look at volume weighted average price instead of just the closing price. But you can see I haven't gotten any of my magenta arrows. So even though yesterday and the day before I didn't get my follow through, my conditional orders in place today, and it looks like it'll probably fill, right? So I'll get my, I would say if you haven't got that conditional order in place, you might want to get a fill. This is where you'd buy some of the stock, or you could buy a substitute option. Let's take a look at, wrong screen. Let's pull up our options lookup tool. And you right now download those free indicators, we also give you access to this options lookup tool. So let's take a look at that. And we're talking about RF. And let's see if we can find a quick substitute option for you, Deborah. I would be thinking June. And I'm looking for a call option. I look at this external value percentage. I want it to be maybe 5% or less, but I also want to have a small bid-ask spread. That's too big. That's too big. Maybe this one is a good compromise. This is the $19 call that expires in June of 2026. It looks like there is enough interest in the market makers that you could get a good price. Actually, I'm changing my mind already. You know what? I don't like any of these. Just buy the stock. I feel like that option chain is not active enough. I don't see that there's a lot of activity. So I'm going to tell you to buy the stock. Make sure you buy it in lots of 100 shares so that you could then sell premium after that. Let that thing go up when it hits its top, so long as it's not too high. And when I say too high, if it's above 28.50, that's too high. If it goes above 28.50, just take your profits. But if it reverses below 28.50, install your collar, start making premium on this. I think we're good. We're past earnings. It's time to turn this into a premium seller.
All right, there you go, Deborah. Regions Financial. That's the follow-up from AJ on his take. Moving on to our second name, we're going international here. Tommy out in Singapore wants to know, do we have any opportunity in Nebis Group, ticker symbol NBIS, which I'm not really even sure what these guys do.
They are an AI play. I think they assemble AI rigs.
Infrastructure.
Yep.
Infrastructure
Yeah.
says out of Amsterdam.
That sounds right. Okay. Yeah. So this is following a lot of symbols are showing this pattern right now. You could look at this possibly as a swing trade. You could also look at this as a premium selling trade that you leg into. In fact, I was actually talking to my users. We also this week, in addition to our weekly workshop, we had our once a month kind of lecture. We call it our learning session on Tuesday. And we were talking about how when you leg into these premium selling positions, where you first establish your initial covering position, and then later, like days or even weeks later, you start to sell the premium and roll out of those adjustment trades. It's actually that initial covering position is a directional position. So a lot of people say, well, I'm either selling premium or I'm doing a directional trade. You could actually do both. Legging into a premium trade is actually doing a directional trade and then doing the premium trades at a later date if it makes sense, if it starts sideways channeling. So what I would say here is, again, it looks like I don't have any of my signals, but that's because it's coming off of its bottom. Trade this with, you don't necessarily have to go so deep in the money. I like to, because it makes the risk analysis much easier. But, go pretty far out in time, 6 months minimum, and pick an option that's a little bit in the money, if not, trading at parity. And trade this directionally. And if it falls short of, I'd say 150, when it starts to reverse, consider putting a collar in place rather than um, rather than just selling out of the position. And then the other thing I would say to you is, maybe you think about a vertical debit or a vertical credit spread, like an 80/90 or a 90/100. Put that thing in place. Remember, the scoop with vertical spreads is only buy as many as you're willing to risk. So if you're only willing to risk 2 or 3% of your portfolio, don't, take that, whatever that number is, 2 or 3% of your portfolio, and that's all you can afford of those vertical spreads. Don't buy more, right? Because vertical spreads have infinite risk. So that's my thought on this. Is you could totally trade this. It could be a directional trade, it could be a sideways trade, it could be a vertical spread trade. But I think that there's something here.
A little bit more on the unique side, but sometimes we get those opportunities. So Tommy, I hope that was helpful for you. All right, moving on to our third and final name in our speed round. One of our longtime viewers, maybe one of our youngest supporters of the channel and the network, Manny. 12 years old now, heading on 13, now in 7th grade. He wants to know, AJ, do we have a play in Ford? Ford is in the news, I believe. Ford is kind of, jumping around on these AI, these just the news of the auto sector and whatnot. Seeing a big pop here, AJ. What do you think? Do we have an opportunity in Ford?
Well, okay, Manny, it's good to hear from you. It's been about a year. I think you were in 6th grade last year, so you must be in middle school now or intermediate school, being a 7th grader. Congratulations. I'm glad you're back. The scoop with Ford, it looks like they reported earnings this morning. And whatever they said, they didn't just report earnings, they had a conference call. And let me see if I can see any information here on this chart. Yeah, yesterday after market close. So they talked, it wasn't this morning, it was yesterday evening. And whatever they said caused investors to bid up the stock by $1, almost 10% today. The scoop is something happened. I call it a transient external stochastic shock, which basically means it's a news headline that soon will be digested and things will go back to normal. So I don't want to trade Ford today. I want to let whatever headline came out yesterday evening get digested and get a little bit farther in the rearview mirror and see where price shakes out. I have a feeling based on my knowledge around Ford that if anything, it's going to kind of drop right back down, maybe not to 12.50, but probably around the $13 range. This might be an opportunity actually since it'll be a high, and Ford has been slowly but surely popping up. Go read the transcript, Manny, of the earnings call and see what actually is happening here with Ford, because I don't know. I didn't pay attention last night, so you're going to have to do some research. But and then see in the next couple of days if this doesn't calm back down. It may be an opportunity for you to short Ford, to bet against it, because it tends to be in this channel. It has very heavy support down at $11.50. So I wouldn't be surprised if, as it starts to calm down, it doesn't come right back down. So if you short Ford, you could make money in the quick short duration as it falls back down. But again, I'm giving you a lot of caveats. I want you to go read that report. I want you to understand why investors are so hyped today. And I want you to watch it maybe for the next few days to see what happens next. But yes, there might be an opportunity for you to actually short Ford. And you can either short the stock, or if you want to keep it cash, you can go look for a far out in time, deep in the money put option, which is analogous to shorting the stock, but it's a cash trade. And then watch it fall and watch your investment go up when it falls a little bit. But I would say 11.50 is where you want to think about either closing that short position or installing an adjustment trade, some sort of selling of near-term at the money put, buying of 3 to 6 month out protective calls, probably up here at the $12 or $13 strike price.
Yeah, two things come to mind when I hear Ford. One, this week I heard a blurb that they called and thanked the president for his tariffs. So it seems as if Ford is benefiting from those moves. And the second is during my stay in Europe, I was surprised to see as many Fords as I did. Fords and Teslas were, very popular, American vehicles that I saw. So, great to see a true American company making its, making a statement across the world and being valued as a product in that sense. So, Manny, welcome back to the show. Thank you for your insight as usual. Hopefully that was helpful. All right, AJ, heading into Halloween week. We've got Halloween on a Friday, next Friday this week. What are you looking at? What is on your radar? What can we advise our lovely guests heading into the weekend, heading into next week?
Well, as far as the broad market is concerned, as of right now, I think that the investors are telling us that they're very happy about inflation not coming in, exuberant, that they're happy that the Fed is probably going to lower rates next week. And so they're telling us that this last couple of weeks of sideways price action was just a, transient set of stuff, and they're ready to start taking on risk again. I think that's what we're seeing today. And depending on where we close, so far it looks like we're going to close above that level that I talked about, 6,753.72. We're going to wind up by the end of the day redrawing all these trend lines again. So yeah, I think that we're going to cautiously continue to look at a neutral bullish market. That could turn on any moment, but we'll be the first ones to tell you about that. But I think we're going to start seeing risk go back on. We'll have to see if the government opens up, and we'll have to see what plays out with the up and down with the China trade. And then today, of course, what happens if it's actually a big deal with the Canadian trade, right? So I just got to keep our eyes open. Like I've been saying, whenever Trump is in presidency, I said this from 2017 through 2021. I'm saying it now. You got to pay attention to the day to day because things can change on a dime with as little as an X comment or a Truth Social comment.
Yeah, you got to get those Truth Social notifications in place. That's for sure. All right, we're going to be keeping an eye on these highs. We'll revisit that next week. As always, everyone, check out our quick links page. This has got all of AJ's goodies here. Show some love on the socials. Hit that like, hit that follow, hit that subscribe button. Get access to these free indicators because I'll be honest, I don't know how long they're going to be free. The team is doing a great job of building some awesome software in the background, and there may be a paywall on these soon. So head on over there and get access to these free indicators while you can. If you want to learn more about premium selling, check out the free workshop. If you need a little bit more hands-on training, check out the coaching. And if you want to be part of that premium mastermind call, that weekly mastermind call, the monthly mastermind call, head on over and check out some more details at tradingtrainer.com. Otherwise, AJ, I tell you what, it feels good to be back in California. I woke up this morning to beautiful sunshine. I believe it's going to hit in the low 80s today. Excited to get back in the groove of things. And it's seeming like we're going to be having a positive October in terms of the market, which I believe is kind of an outlier when we look at historical October data. So government shutdown, market's still happy. AI bubble, maybe not. A lot to keep an eye on. Once again, to all the viewers out there, we appreciate all of you tuning in, showing some love. We appreciate it. And AJ, as always, on behalf of the viewers, we appreciate your time and your insight weekly as usual. And if any of you guys have any questions at any moment, feel free to send us a direct message. Head on over to tradingtrainer.com. Leave a comment in the chat, and someone from the team will get back to you as soon as you can. With that, that's all I got on my end. AJ, final words?
No final words. Have a great weekend, everybody.
All right, guys. We'll see you next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button